Welcome back. The big question going into tech earnings this week was, will that huge step up in capital spending on AI infrastructure pay off? Well, we got a read into that from cloud providers Amazon, Microsoft, and Google. Deidre Bosa has more in today's Tech Check. Hey, Dee.
Hey, good morning, Leslie. So, yes, this week's trio of earnings reports from those hyperscalers does confirm AI is the next catalyst for growth and potentially a new order where Google has the advantage. Take a look at this chart. Annual cloud revenue growth for all of them was sliding going into 2023 as that broad enterprise migration to the cloud, it was decelerating. But at that time, too, generative AI was just ramping up. Microsoft's Azure, that is the blue line, it was the, of course, main early beneficiary. Its partnership with OpenAI, its Copilot AI tools, largely seen as a leader in the space, and therefore it grew its top line faster than its rivals. But more recently, some of the air coming out of that trade, in fact, that early advantage from its OpenAI association looked more like a burden this past quarter. CFO Amy Hood said the company will record a $1.5 billion hit, largely thanks to OpenAI's expected loss. Remember, too, that part of its investment in the startup, it was in the form of discounted cloud credits, potentially leading to lower short-term income versus, getting standard market rates from other customers. And now CEO Satya Nadella said that cloud is facing capacity constraints. Now, one of the most unexpected developments of the week, Google's strength in cloud. 35% revenue growth far exceeded expectations and put Google ahead of Microsoft Azure and Amazon AWS in terms of pace of that revenue growth. That's the green line in this chart. Now, Google is the only hyperscaler that both builds and owns the foundational models, that's Gemini, powering its AI offerings, and also has the cloud infrastructure to offer AI tools to enterprise customers. So in a way that Microsoft and Amazon cannot, Google can lean on its own AI expertise to compete here. Another advantage it has, Google has been so early on AI that many of the founders at the buzziest Gen AI startups are ex-Google employees and now clients of its cloud business. Amazon's AWS, meanwhile, it's the lower line of that chart. It is subject to the law of large numbers, so it is going to be growing slower, but its AI strategy also seen as lagging Microsoft's and Google's. It relies externally on Anthropic's models for its offerings, and product integration has also been slower. A recent report saying that it's delaying the rollout of its new Gen AI improved Alexa assistant to next year, 2025. In a positive sign, though, Andy Jassy last night said that its AI business is growing at a rate 3 times faster at this stage of its evolution than AWS itself grew. The takeaway, guys, earnings signal the shifting landscape in cloud. It is clear that the next phase will be defined by who can best harness the power of generative AI. We are starting to see the read-through, but I didn't mention spending. As you guys well know, that is still at very elevated levels, so it's always going to be this trade-off.
And how do you see kind of the interplay between that growth that you demonstrated with capex in terms of investors' kind of patience with this whole process?
Well, I think they're going to have to continue to be patient, right? Because some of the gains that we're seeing that I talked about in terms of that top line growth speeding up, that is going to be offset by these enormous amounts of spending. And what we heard this quarter from the hyperscalers is that's not going to slow down anytime soon. So it's still going to be this trade-off. And importantly, too, we're going to have to continue to see the adoption of these Gen AI tools. I mean, Microsoft, that line that you saw on the chart could be a little bit of a warning, right? That if those tools underwhelm or if their enterprise customers don't see the read-through, they don't see the return on investment, they might not keep spending.
Yeah, Street's very alert to all those possibilities.